However, with that, of how you can minimize taxes is.
I was just thinking about like W-2 type employees, like what options they would have, because they don't have, there's not many advantages they have to reduce their taxable income. So like a HSA, a IRA, I don't know if maybe any other retirement accounts. I was just gonna ask you, like, what are a few other options, if any, that somebody could put their money up to reduce their taxable income if they don't have a side job or business?
Yeah, so what I'll talk about the HSA, and then we'll talk those that are on just the 9 to 5 family and what exactly you can be able to do. So the health savings account has, you probably heard, is like three tax benefits.
Yeah, I was going to ask you about that.
Yeah, actually, let me take a step back before that and explain what exactly is a health savings account. If you take out health from there, it's just a savings account, right? Just think of it as a bank account that is dedicated for any medical expenses that you have. And the government is saying, we will give you a tax deduction if you set aside some money and put it in a specific account, and you can be able to cover your medical expenses tax-free. So the benefit of a health savings account is, and this ties into a little bit where you were talking about the Roth and then your traditional, right? The money that you contribute to an HSA is a pre-tax, but basically mean that portion is not being taxed. You're not getting taxed on those dollars. And then in addition to that, if your account reaches a certain level, you can start investing that money. And so in some providers, they start like $1,500, right? And so then any money that you have over that, you can invest that money in the market. So if you're investing that in the market, you're getting dividends, the value of those stocks are increasing, which means your HSA is growing. That gets to grow tax-free. So you get to pull that money down, and as long as you use it for medical expenses, you don't pay any taxes on it.
Which a lot of people are gonna do anyway. So there you go.
So it's basically, it's like, wait. So if I just put some money to a set aside just for medical, and this can happen at any time, regardless of what age you are, you're getting the tax incentive for it. So I want to say I don't have the amounts right on me, but I think it was last year, it was around close to 4. And then families, it was like 8,300. So if you're single, you're pretty close to 4. So in terms of what is it that you can possibly do, that's something each year you could be pushing to be able to max out. And ultimately, you just putting money in another bank account and just getting more tax benefits. And now I could kind of talk about the retirement piece, since that sort of segues. So with employees, you really get the options of HSA and your retirement plan. Well, with a retirement plan, you can, last year you'd be able to max it all over like $23,000. So that's
about your IRA?
IRA was like 6.
So are you talking about a retirement plan through a job? Gotcha.
So you have when I mentioned a traditional and now there's several retirement plans that are out there for, well, I guess I was going to say business and individuals, but technically, since the business can offer, well, no, it still would be different. I guess I'll say there's several retirement planning options of accounts that you could pick, that's on the business side as well as on the individual side. For most of the time, what you see with families where they pick and choose, you have like the traditional or Roth. Traditional is saying, hey, instead of paying these taxes now on the dollars that you earn, you're now going to pay taxes until you withdraw this money. Now, depending on you once you reach a certain age, I want to say that's 50. I want to say that's 59. years. And so once you basically surpass that age, and you pull that money down, you would be taxed on it of whatever income tax bracket of what you were on at that time.
And now, whatever the tax rate is at the time of withdrawal.
Right. Now, let's say and depending on how much money you've withdrawn at that, withdrawn and pulled down at that time really determines, and then other income sources will really determine where you're going to be at from a tax bracket point. Now, you could say, well, what happens if I want to get taxed now and I just take the money out and I don't got to worry about it and it's tax free? That's where you have Roth. The Roth comes in play. Then you say, okay, fine. What happens if my company doesn't offer a retirement plan? IRA. That's where the IRA comes in, which IRA stands for Individual Retirement Account.
Right.
So I'm going to say that's the contribution of up to 6, but you also have other maneuvers out there where you have like a backdoor Roth IRA, which are ways to be able to maximize, putting more into your retirement. But the biggest thing of what you see is just trying to put as much money into the retirement account as much as possible. That's the biggest thing as a family that you could be able to leverage. So that, and then if you're married, you got both spouses that max out on both of that on each side, 23, that's 46. And then on top of that, you have both able to get the HSA to hit the 8,300. You over 50 grand of, money being pumped into accounts that is still with you and not out to the government.
Exactly. And that's the whole name of the game.
Oh,
that's
absolutely.
Something that I didn't really understand. I guess growing up, stepping into like working full time, I've been kind of working little part-time jobs throughout high school for a while.
Yeah.
First job, I was a paper boy, but
I was a paper boy too. I remember that.
What grade?
Oh man, I can't even. It was, man, I was little, and I'm gonna mess up the grade. I remember they used to drop the stuff off in front of the door with rubber bands, and it was just like,
man, yeah, exactly. Yeah.
Put in the bag,
fold it,
fold it.
I was like third grade, or like 9 years old.
Yeah. It was around that time. I didn't want to mess up the age. So say something off the wall, like, yeah, I was 7, 8 years old. I'm like, wait, what? Like, yeah, do around the neighborhood and everything.
Yeah, man. So that was just something that like I didn't understand growing up, like the whole, like people always talk taxes. I like kind of ignored it, you know what I'm saying? Taxes wasn't my thing at all, you know what I'm saying? Because I didn't understand the whole aspect of keeping your money instead of giving it to the government, you know what I'm saying? There's so many different advantages and ways to do so, right? But when you're dealing with a business, they have more advantages than W-2 wage workers. So, what are ways like businesses can like legally not pay taxes? Maybe like a couple tips you could give to business owners.
In not paying taxes, that's.
Well, let's say minimize their taxable income. I would say
in terms of my expertise,
let's say that
there's probably realms in what you can do to not pay any taxes, but most of the time is really how exactly you're spending your money and moving your money that determines how much taxes you ultimately pay. So as a business owner, taxes is going to be primarily driven by the profit of what you make for your business. As you all know, there's different kind of taxes that you pay, right? And the biggest one that we're talking about right now is income taxes. You got sales tax, liquor tax, all these different type of taxes. And businesses, whichever industry and everything that you're in, it's all different kind of taxes of what you're going to have to pay. So that's why I look at it from my lens as being a bit difficult. But on the income tax side, there are possibilities. I just honestly am not sure in setting it up from a professional standpoint of how you could do it. However, with that, of how you can minimize taxes it goes back to understanding that you're taxed on your profit, right? So whatever money you made minus whatever money you spent, you're getting taxed on that profit. So when you think about it and you ask yourself the question, well, what is it that I can do with the money I have? Well, invest it more into your business. Pump more money into your business. What specifically does that look like? Maybe you might need to get some more equipment. Maybe you need to hire somebody. Maybe there's some type of software tool out there that can make your job a lot more easier, but pump more money into your business. Another thing you can do is with the benefit of being in business is the tax code has over 50,000 pages. A portion of that is for individuals and like employees, family, but then a good chunk of it is for business. When you're in business, that opens that code up for you to be able to do quite a bit. I'll give you a good example. You can provide yourself as a business owner a solo 401k. A solo 401k functions very similar to if you were an employer at a job as a traditional 401k, except the concept is just for yourself. So you can, I don't know what the limitation, I would say the limitations are higher than what you have with the traditional. I think you could get almost up to like 50, 60K, right? And so when you think about that, it's like, hey, that's a vehicle that I could be able to use as a business to say to myself, all I have to do is create an account. I don't have to wait for somebody and talk to HR to see if I could get that. Oh, let me create that. Let me then take my money that I earn and put it into my own retirement plan.
So what's a strategy that you see wealthy people use that, people who aren't wealthy and privy to the information maybe could use but don't?